NVIDIA may have just given bulls exactly what they've been waiting for. After weeks of pulling back, the stock is attempting to break out of a falling wedge while holding above key moving averages on multiple time frames. But there's one major resistance level that could decide whether NVIDIA rallies towards $240 or even $260, or it gets rejected back below the $200 level. Now, right now, the price of NVIDIA is at $204.12, and starting off here with the monthly chart, we see that it looks pretty bullish. The stochastics here are low. We are above the 21 moving average, so that is bullish. Now, one thing that we have to look at is that we got rejected off of these wicks the past 2 months. Now for July, we're trying to reclaim what we lost in June. Now we are far away from the 21 moving average at $166.20. We can see here that the stochastics RSI, even though they're low, they kind of want to roll over, and the RSI is kind of toppy here, so we might have to roll over here as well. Now we should be able to use the 21 moving average as support, and I don't think we'll fall directly down here. I think maybe we'll go sideways and wait for the 21 moving average to catch up, and maybe somewhere in the middle, once it touches, we'll be able to go up. Now we head over to the weekly time frame. We see that the stochastics are on the way down, so we still need more time before we could pump up, but the RSI just bounced off of the 50 and is pointing up, so that is bullish. Now what I'm liking here is that we haven't got below the 50 moving average on the weekly time frame. For me personally, if we start closing candles under the 50 moving average, that could be the start of a bear market for that asset, and we've been able to bounce up from it, and we're back above the 21 moving average. Now I'm looking at this as a falling wedge, and as you can see, we already started breaking out of the falling wedge, and this measured move takes us to about $261. So as long as we can stay above the 50 and the 21 moving average, and once this resets on the stochastics RSI, I think we could start making a move up towards that level. If we head over to the 3-day chart, we can see that the stochastics look nice. They kind of double bottom here, they're pointing up. The RSI also double bottom. We're back above the 50, and we bounced right off of the 50 moving average. This is big. We went and we touched it a couple times. Now we have a big green engulfing candle. Now what we need to do is get back above this 21 moving average at $207.16. If we could do that, that falling wedge is going to continue to make its measured move. On the daily time frame, stochastics are also low. We're pointing up. The RSI just pierced the 50. We're also pointing up, and we just got above all the major moving averages, especially the 21. Now there's going to be some resistance here at the 50 moving average, which is at $209.50. But if we could get above this 50 moving average, we could definitely start testing higher levels. So right now, I would be looking for $210 as a resistance zone, and if we could break above that, then we have clear skies to go in and touch 220, 230, 240, 250. On the 4-hour time frame, we see that the stochastics here are starting to get a little toppy, so we could start rolling over here. One thing that is bullish is that we got above the 21 and the 200 moving average with good strength, and we're trying to test the 50 moving average now at $204. Ultimately, we want to get back above this 80 moving average, and coincidentally, that's at $210. Again, if we could get above that, it'll be clear sky for us. Now, one pattern that I'm seeing here is that this does look to me like a double bottom. So even though we're getting toppy here on the stochastics RSI, it looks like we could possibly make one more move up before crashing down. And if that's the case, this measured move does take us back above the 80 moving average, and we'll be back like around $214, $215. So this double bottom here is still in play. If we get rejected here, we need to stay above the 21 and the 200 moving average, which is at $197. If we could stay above that, we could still remain bullish. If we lose the 200 moving average with strength, then that could look a little bit bearish here. On the 1-hour time frame, stochastics are toppy, RSI is toppy. We're kind of rolling over. We're getting some clear rejection here from the 200 moving average at $205, and we're a little far away from the 21 moving average at $197. So if we get rejected off of this 200 moving average, I could see us coming back down to touch the 21 and hopefully holding that as support. If we could hold that as support, then we could go back and retest that 200 moving average and then break it at that point. But we still have a lot of strength here, and I'm also liking that double bottom on the 4-hour chart that I showed you previously. So it's possible that we make one more move up above this 200 moving average, and then when we start to reset, we use that 200 moving average as support. The 15-minute time frame also looking a little toppy, RSI looking toppy. We're kind of far away from the 21 moving average at $201.13. So again, we're either going to go sideways here, flag out, wait for this 21 moving average to catch up to price, then continue going up from there, or we might come down towards this 21 moving average and hopefully hold that as support. If we lose that, our last line of defense is going to be this 200 moving average at $196. We must hold that to remain bullish. If not, we could see lower prices. So right now, I see us ranging in between $195 and $210. As long as we could hold above $195, I think we're still in the clear. And if we could burst through $210, that's going going to open the gateway for higher prices. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.